Right, good afternoon, folks, on Monday, the 26th of June, and we are back for another week of trading. We'll flick across the calendar and we'll see what's on the agenda in the coming week ahead. What we've got this week, or the main focus of attention this week, is going to be the ECB's Forum on Central Banking. Which is or does happen to be titled Macroeconomic Stabilization in a Volatile Inflation Environment. Right, we do have some inflation figures out later on in the week, which we will speak about once we get round to it. But we've got a raft of central bankers out speaking over the course of this week. We've got Christine Lagarde, as you can see. We've got Jerome Powell on Thursday. We do have Andrew Bailey speaking over the course of this week. We do also have Jerome Powell on Wednesday as well as Thursday. So, a number of speeches out from major central bankers or heads of major central banks as we head on into this week. And you got to think about the current economic situation, the current context of the economic situation, where you've got central banks hiking interest rates. If you go back to COVID and you look at the cut of interest rates to zero to help provide support to the economies, to then unprecedented amounts of monetary stimulus that caused inflation to spiral out of control. You then come into the Russia and Ukraine situation, where you've got restrictions on Russia output of commodities, which then further increases the pressure on inflation. And that has continued over the course of last year and into the first half of this year, where inflation across the board, no matter what country you look in, continues to remain elevated and continues to remain too high for economies to be able to deal with in a sustainable way. So inflation nowhere near 2% in a lot of the major economies, and central banks are attempting to get that under control, and we're going to look for some further updates this week on how they plan to do that going forward. Over the last 2 or 3 weeks, we've had a bunch of central banks. We had the Australian Central Bank, the RBA, hiking interest rates unexpectedly. We had the Canadian Central Bank, the Bank of Canada, hiking interest rates unexpectedly. We had the ECB hiking interest rates. We had the Fed, who went on pause but did signal further interest rate hikes to come over the second half of this year, on top of what markets had anticipated. They had anticipated a 25 basis point hike throughout the rest of the year, a potential for some cuts later on in this year. The Fed blew cold water on the interest rate cuts and suggested 2 further 25 basis points hikes, or more, another 50 basis points worth of hikes to come by year end. So on top of markets expectations, the Bank of England hiked interest rates by 50 basis points last week rather than the 25 that markets had expected. They did also suggest, or markets had been suggesting, that we may see a terminal rate of 6%, and even money markets are pricing in a potential terminal rate of 6.25% in the UK. So we've got all these central banks. Couple that with the Swiss National Bank, sorry, I nearly forgotten, Swiss National Bank hiking interest rates by 25 basis points, which has not been a regular occurrence over the last number of years. A hike from the S&B, and there is potential for further rate increases to come. So you've got all the central banks still continuing to hike interest rates in order to cool down inflation, which is not quite cooling down. And now we're getting to the stage where they're hiking interest rates to a point where it's looking like it may cripple some of these economies. Now, if it does cripple some of these economies, and they do end up hiking these economies into recession, well, then that's obviously negative for global growth. Further updates then this week on that situation are what we need to look out for. Right, these speeches out throughout the course of the week will give us forward guidance on what to expect going forward, which is more interest rate hikes. How much more, we just simply don't know. Markets can price in what they think is appropriate, but what actually is appropriate, what we actually get, can sometimes be a little bit different to what markets price in. So that is what is on the agenda in terms of the ECB forum this week. We do have some inflation figures out of Canada. Now, with the surprise interest rate hike from the Bank of Canada, these inflation figures do become important. We had some positive retail sales figures, some positive housing figures since that interest rate hike. These inflation figures now come into focus. Now, previous was 4.4%. The month before that was 4.3%, so it actually ticked up. Now, consensus is for 3.4%, so you cannot imagine it ticks up higher and beats consensus by over 1%. You have to imagine it does pull back, but does it come in higher than consensus and does not pull back as much as markets are anticipating? That may give us a future clue as to how the Canadian situation will fare going forward, but you have to imagine they may potentially go back on a pause as inflation is expected to cool down over the month of May. You come in to Thursday where you've got some inflation figures again, some CPI prints out of Germany, which is expected to tick up. Now, if that does tick up further than the 6.3%, you'd have to expect the ECB will keep the foot on the gas. They did suggest at their meeting that they are showing no signs of slowing down and they are going to continue hiking interest rates. But with the Eurozone in a recession already, the further they hike interest rates, the more of an issue that's going to be for the economy. So they ideally will not want to hike interest rates too far, but inflation is still rising. Or as inflation continues to rise, they have to keep hiking interest rates, and that is not a good situation to be in. And that is Germany. We then come into the Eurozone inflation as a whole, right, which is expected to tick down. So that's a bit more of a positive. But this German inflation continues to push higher. With Germany being the major economy within the Eurozone, they will look at that. They will keep an eye on that. But if you can get the other nations, you can see Italian inflation due to fall, French inflation due to fall, which then contributes to the inflation print in the Eurozone. But if you do get a beat on all of these and it does come up near 6.1%, you can be pretty guaranteed they will come in with some hawkish chatter over the course of this week, and that should potentially send euros higher and the DAX continuing to the downside, which gives us this to work with as well. You can see consensus 90.7, actual 88.5 in terms of the IFO business climate from Germany this morning, which is a good future indicator or forward indicator, or leading indicator, should I say, for the DAX over the last 6 or 8 months. So the fact that that is now trending lower for the past couple of months below consensus obviously suggests the business conditions in Germany are not positive going forward. We then get PCE on Friday, which will update a little bit more closer to the time, but PCE is the Fed's preferred metric of inflation. So they will look at that as it comes around to Friday in terms of how they view monetary policy going forward, and that consensus is due to come in line with previous, right? And that continues to remain sticky, as you can see here, 0.4, 0.3, 0.4. Now, if you do get a beat on expectations here, that is likely to solidify a further 50 basis point hike this year, I would imagine, and definitely would solidify a further 25%, not quite that much, 25 basis point hike at their next meeting in July. So that's what we're looking at over the course of this week. I'm expecting some hawkish central bank chatter, which is not likely to be positive for markets. So you'd have to imagine sentiment from last week will probably remain. Markets fearing for global growth off the back of these interest rate hikes continuing further than they had expected. With hawkish central bank chatter this week, you'd have to imagine that stocks and risk itself remains under pressure over the course of this week. So probably stocks lower, safe havens higher, I don't think is a bad way to play it over the course of this week.